It was interesting that we had that trend resumption down yesterday, and then those two big bars late in the day after three decent bars here. The market was reversing the breakout below the day before's low and trying to get up to a new all-time high. Whenever, yesterday was an outside day. You can see over here in the daily chart. And whenever you have an outside day, there's an increased risk that today would be an inside day. And since we're near yesterday's high, there's an increased chance that we're going to fail to break above yesterday's high and then reverse down and test near yesterday's low and then end up as a trading range day. The daily chart is so strongly up over the past 10 days or so that the odds are we're going higher. Will today be an inside day? It might be, but we have strong magnets up there and we have strong momentum. Daily chart, we have a measured move target a little bit above based upon this gap, negative gap, slight overlap here. And the weekly chart has a measured move target about 20 points above that. Here's the weekly chart. We had a strong breakout here, and the measured move up is about 20 points higher. The biggest problem that the weekly and monthly bulls have is that the buy climaxes are so historically extreme. Weekly chart, I think 47 weeks without touching moving average, got close, did not get there. And the monthly chart, we now have 12 months without touching without a pullback, and that is really, really unusual. Daily chart, looks like we're going higher. We may go sideways more. We've been sideways for 3 days. And as I said, when you have an outside day, there's an increased chance of an inside day on the next day. For example, here's an outside day, followed by an inside day, outside day, followed by an inside day. And additionally, even if you go above yesterday's high, there's an increased chance that the breakout will not get very far because we're now in a 3-day tight range and breakouts typically do not get far. But this momentum is the wild card. It means that we are probably going higher. The 3-day tight trading range and the outside day means we may go sideways before we go higher. The downside risk, I think, is small until after we go sideways for several bars first on the daily chart. So the downside risk over the next week or two, probably not very big. You'll get a day or two like that, but the bulls will buy it. We're within a couple points of the all-time high. We're within 1 point of yesterday's high. Both are magnets. Yesterday tried to break to a new all-time high, reversed down, and we're trying again today. We're 3 minutes into the bar, and it's only 4 ticks tall. So even though we gapped up, and the open of the day is the high tick, the market is not concluding the price is horribly too high. It's not, we're gapping up near resistance, the all-time high, yesterday's high, but the market is not reversing down strongly. So it's not rejecting this price. 4 ticks, and we're 4 minutes into the bar on a 4-tick tall body. So the bulls are not aggressively buying either. Most of the trading over the past few days has been sideways. We've had breakouts up and down, but since here we've been mostly sideways. The bears want a double top, lower high, major trend reversal. We have a high, we have a lower high. The bears are trying to get a double top with it, break below the neckline, measured move down. Bulls are trying to get a new all-time high. This rally is so strong, I think it's more likely that we'll get the new all-time high. Okay, 5 minutes into the bar. The bar is 4 ticks tall. Another thing about this bar, it opened on its high. and the odds are we're going to go above its high, because if you look on the daily chart, how many days a year is the high of the day the open of the day? How many days a year is there no tail on the top of the bar? It's very rare. A lot of days have bars like bar 1 where the open is at the high, but the majority of them end up not being the high. For example, 2 just went above 1. And if you look at the daily chart, almost every day there is a tail on the top and bottom. A lot of times it doesn't look like it. For example, it does not look like there's a tail below or above here, but let me check. The low is 1 tick below the open, and the high is 1 tick above the close. So even this bar that looks like it opened on its low and closed on its high is actually a 1 tick tail below and a 1 tick tail above. The reversal up yesterday made the market always in long. The gap up reinforces it, but the bear body, I think, will discourage bulls from buying the 1 high. Remember, I just showed an example where the market had a 1 tick tail on top. That tells you that traders will sell exactly at the 1 high, hoping that we only go 1 tick above, form an early high of the day, and then trade down for the rest of the day. And traders who do that, maybe they risk 2 or 3 ticks, so they sell the 1 high and put a stop 2 or 3 ticks higher, so they're risking 2 or 3 ticks, hoping to make 8 or 10 points. Whenever you're risking 2 ticks on any trade, 3 ticks on any trade, you've got like a 90% chance of losing. Whenever the risk is very, very small, the probability of making money is very, very small. However, it still can be mathematically okay to do. But you have to be willing to lose 90% of the time, and the 10% of the time when you win, you have to trade those rare winners perfectly to get as many points out of them as you can. And it's hard to be perfect. And therefore, even though on paper, a 10% probability can be a profitable strategy, it's very difficult to make it profitable in real life. The lower the probability of success, the more perfect you have to be. So what do you do here? Are bears going to sell the 1 high? Probably not a lot of bears willing to sell, and that's why we're not going down. Are bulls going to buy the 1 high? A 1 tick bear doji at resistance, yesterday's high, the all-time high. Well, not a lot of bulls so far are buying the 1 high. So best choice is wait. This looks like this. Odds are we're going up. The market is deciding whether today will be an inside day after yesterday's outside day. And for the bears, this is a 60-minute chart. They're trying to get a double top, lower high, major trend reversal. So they are trying to keep the market from going above yesterday's high. They want a double top here and a reversal down. So it's an important price. If we get above yesterday's high, we're so close to the all-time high, we'll probably put in our new all-time high. Can today be, okay, you see the bears just gave up. So the bears were hoping that it would go 1 tick above 1 and reverse. And then as soon as it goes 3 ticks above, that tells you that the bears believe their strategy is going to fail. So now we're testing the resistance of yesterday's high. The bears are trying to get a double top on the 60-minute chart. But, okay, and you see, as soon as we went 1 tick above, we didn't just go 1 tick above, we went several ticks above. And now we're at a new all-time high. Over the past few weeks, every day we've been getting new all-time highs, and this is another one. The bears want a tight trading range, but we got important magnets above, and we may get drawn up to those magnets. Is it by the close? Probably is, but whenever the probability increases, the risk usually increases as well. And you can see by 2 becoming a big bar, the risk for the bulls is greater. You can see as soon as it closed, traders bought. But let's see what the follow through looks like. 60-minute chart. We're trying to break above a tight trading range, and most trading range breakouts fail. And that means the probability of the market going much higher here is not as great as it might otherwise be when you see a big bull bar like 2. 3-day tight range. That means we've had lots of reversals for 3 days, and that means the follow through up and down has been bad. Yesterday we sold off strongly, yet reversed up. Right now, I would say 30% chance we've seen the low of the day, maybe 40% chance. A lot. It would be very helpful for the bulls if 3 is a big bull bar closing on its high. That would increase the probability further that we've seen the low of the day. This is what the bears want. They don't mind if it goes up as long as it stalls. Here it stalled after 3 bars. Enough momentum so we'd get at least a small second leg up, but it failed and we had a reversal down. Can you sell below 3? I think I would not sell below 3, even though in general 50% of strong moves up or down in the first hour fail. 2 was surprisingly strong, and whenever I say the word surprise, that means a lot of traders were caught off guard, and it usually means there's going to be follow through. Look at the low of bar 3. Okay, it's at the low. It's at the open of bar 3 is at the low of bar 3, and it's at the 2 close. That tells you that as soon as 2 closed, a whole bunch of traders hit buy the market, and so 3 never traded below the 2 close. There were so many traders buying the market, and that increased the chances of at least some follow through buying. Can 3 do anything to make bears sell? The odds of it doing anything that would make bears sell are small. It would have to become a huge bear reversal bar, and that is unlikely. This is a strongly bullish open. Same thing, it's buy the market, buy it for any reason. Some traders might scalp a little bit. I showed that in one example of, this is another example of a gap up on a couple bull bars, and we pulled back, but we got a double bottom. When you get that kind of an open, usually one of 2 things happens. You get a spike in channel up, or you get a deep pullback and a trading range. The chance of it becoming a bear trend day without first going sideways for 20 or 30 bars is small. 2 big bull bars, deep sell-off to a new low, and it became a trading range. Trying to find that other day that I showed a moment ago. This one. Okay. The chance of it becoming a bear trend without going sideways for 10, 20, or 30 bars is small. And that means the downside risk over the next few bars is small. That's interesting. That tail on the top of 2, definitely less bullish. but still probably buyers below 3, buyers below 4. Right now, I would say 50% chance we've seen the low of the day. That means 50% chance we have not, right? It's 50% chance we'll fall below 1. Okay, that big tail on the top of 2 made a lot of bulls hesitant to buy the close of 2. You can see 3 dipped 2 ticks below the 2 close. Still always in long. And right now, just from these 2 bars, the day is probably either going to be a bull trend day or a trading range day, or at least a trading range for the next 2 or 3 hours. The chance of a bear trend is much less, at least a bear trend within the next hour or 2 is much less because of those 2 bars, especially bar 2. What's the chance of this being the high of the day if it reverses here? What's the chance of, if you sell below bar 3, the bar that good and a failed breakout above a 3-day range, maybe a 30% chance, 25% chance that's the high of the day. But whenever you get a strong breakout on the open, 2-bar breakout like that, and then you get a bar closing on its low with a decent sized bear body, a lot of bulls, I don't buy that low, right? Because as I said, 50% of breakouts on the open, strong rallies or strong sell-offs reverse. And when they reverse, they're more likely to reverse if you get a good bear bar like that. While the odds are buyers below, it's really easy to lose money. You buy the low of bar 4, knowing that the odds are buyers below, but then it just sells off, sells off, sells off, sells off, and then it starts to accelerate down, and you end up scaling into what becomes the high of the day. So even though the probability is against it, the risk is very big, and therefore, I don't take that buy. The probability is against this being the high of the day, but that does not mean it's high enough for me to take the short. You can see a lot of traders, a lot of the bulls are panicking out of their longs, and aggressive bulls are taking the short. But it's a good example of what I was saying, how on the open, 50% of moves, strong moves up or down, reverse. What do the bears need to turn this into a bear trend? Well, probably a huge bear bar, not likely, or 3 or 4 smaller bear bars. Here we gapped up, had a bull bar, became the high of the day. Here we gapped up and had 2 bull bars, possible high of the day, but at this point I think more likely trading range. Yesterday was an outside day, but even though it was an outside day, it was not all that big, and therefore it's still possible today could become an even bigger outside day and go above yesterday's high and work its way all the way down below yesterday's low. Not likely, but sometimes you'll see consecutive outside days, an outside day followed by an even bigger outside day. What do you do here? Well, if you were long, I would get out below 4 because of what I said, possible failed breakout and reversal. And for the bears, sometimes I would take that short below 4, but I did not today. I usually do not. I usually wait to see what we get. The one thing I never do is buy the 4 low, and then the one thing I never do is buy the 4 low and scale in lower. Too much risk, it's the high of the day. Big up, big down, big confusion. This is really an important bar. If the bears get a 3rd consecutive bear bar, especially a big bear bar, then the odds are we've seen the high of the day. If the bulls get even a 1-tick bull body, it increases the chances that we're going to have an early trading range. For the bulls, it's a bull flag. I was typing for the past few minutes, that's why I have not been talking. Anyway, for the bulls, they view 4-5 as a pullback from the breakout to a new all-time high. However, 4-5 are big enough so that most bulls are not going to buy above 6. And for the bears, they really wanted another bear bar, and they wanted it to close below, or at least trade below the 5 low. And right now, the bulls are disappointed by the 2 bear bars. The bears are disappointed by 6 being a bull bar, and this is therefore a trading range open. The bulls are hoping it's a pullback and that this is so strongly up, we'll get a channel up from here. And the bears are hoping that the reversal down is strong enough so that we'll get a lower high and then a channel down from this bear reversal. I am neutral. I'm slightly more bullish than bearish, despite 4-5. It looks like a big retracement of 2-3, but if you look at the rally from 76, it's still not all that big a pullback from the rally that began yesterday. So what do you do with the 6 low? The bears, I think, needed to get another bear bar. They needed a 3rd bear bar, and that will make a lot of bears hesitant to sell below 6. Will the bulls buy below 6? Well, because of the big up, big down, a trading range is likely. And if a trading range is likely, a lot of the bulls do not want to buy that far above the average price. And that will discourage a lot of bulls from buying the 6 low. However, if we get down to the 1 low and the moving average is around there, the bulls will try to get a double bottom. Sometimes you'll get a gap up and a sharp sell-up. Sometimes it can last a lot of bars, yet it forms a double bottom with the low of bar 1. Three-bar rally, 8 bear bars formed a double bottom with the low of the day, and we rallied. Basically, trending trading range day, lower range, breakout, upper range. When you get a big sell-off like that on the open, the odds are against the day becoming a big bull trend day. It's either going to be mostly sideways or possibly a bear day. And that's what we're deciding right now. Is it going to be a trend day up or down? The odds are against a big bull trend day at this point. And bar 6 weakened the chances for the bears having a big bear trend day. Also, this is a lot of points up here, and that reduces the chances that we're going to go straight down. 50% pullback is right here, and it's right around this tight trading range, which is also a magnet and therefore support. So we may go a little bit lower, but the bears need to break strongly below the 50% pullback and the moving average if they're going to get a big bear day. And they got the 60-minute moving average just below that. So the bears need to do a lot to convince traders this is going to be a big bear day. Remember I said that yesterday was an outside day that was not especially big, and that created the possibility that today could trade all the way down below yesterday's low and form another outside day. So yesterday's an outside day. And if today trades all the way below yesterday's low, it would be a bigger outside day. Bulls buying below 6, they probably need a stop, somewhere down here, maybe even a measured move down. They're not going to let the stop get hit. They would get out before, the market got to that stop. But if you're buying below 6, you have to put a stop somewhere, and below 1 might be too tight. The bulls need to prevent the bears from getting consecutive big bear bars. They need to get this to start to go sideways if they're hoping to get a double bottom with one. As I said, sometimes the double bottom follows a lot of bear bars, and sometimes it even comes from slightly below one. Here's an example. This low is slightly below that low, but it's still a double bottom after a reasonably strong reversal down. So strong rally, a lot of big bear bars, testing the low of one, but it's basically just a 50% pullback from the gap up and rally. This is similar to yesterday. A rally on the close, gap up, and rally on the open. Big reversal down, but found support about halfway back down. I'll talk about this again in a few minutes. Getting close to the 50% pullback, will traders buy the one low and the moving average? I would not. Can you sell right here? My hesitation is the one that I said. It's up very steeply, and therefore there's probably support around the 50% pullback in the moving average. Usually a rally that's this strongly up does not immediately reverse into a bear trend. Sometimes it gets a very deep pullback, but usually the pullback finds support around 50% down, maybe this average, maybe that average, maybe here. So I'm not confident that we're going a lot lower. Anyway, I wanted to just make the point that this sell-off was around a 50% pullback of that. Another example, around a 50% pullback. Buyers or sellers here. I'm flat, but you have to bet that there'll be buyers around the moving average, buyers around yesterday's trading range, and buyers around the 50% pullback. So I would not be selling closes here, even though right now the bears are in control. What are the chances we've seen the high of the day? I think the sell-off is deep enough, and with 4 decent bear bars like this, the bears are strong enough so that I would say we have a 60% chance that we've seen the high of the day. The market now is deciding whether this is a sell-off in a trading range or the sell-off in a bear trend. The reason why I think it's a sell-off in a trading range is because it would be unusual for the market to go up that far and reverse straight down without first going sideways. So it's possible we can go sideways for an hour or two and then go down below yesterday's low. But I think the downside here over the next few bars is small. Some buyers at the one low. Some buyers trying to buy around the moving average. Some buyers buying the 50% pullback. Maybe we'll get a small parabolic wedge sell-off. So leg one, pause, leg two, pause, and then leg three. So it could be a nested wedge with 1, 2, 3, and 1, 2, 3. But I still think the odds are we're going to stabilize around the 50% pullback. Maybe back in yesterday's range, the market thought this was a fantastic price for 4 hours. It stayed at that price in a very narrow range for a lot of hours. 50% pullback, moving average, yesterday's tight range. Might be a little parabolic wedge sell-off with 5 and 8. So I'm not willing to sell here. Probably buyers around where we are. If not here, then 60-minute moving average. Looks like we're going to get some kind of a parabolic wedge type of bottom here. You can see bears are hesitating. 50% pullback, moving average, and yesterday's tight range. So sell it close, but a lot of bears are not selling. They're waiting to see what the market's going to do here, and they'd rather sell a rally. Testing yesterday's close, 60-minute moving average. I'm not going to sell here. I think we're always in short, and right now probably 70% chance we've seen the high today, maybe 80% chance, but we're right at support. And whenever you have that much of a rally, it's very unlikely to become a bear trend without first going sideways. More likely that if you get a sell-off, the sell-off will be a bear leg in what will become a trading range. So probably going to bounce here or soon. Can you buy and put a stop below yesterday's low? I think we're going to bounce, but so I would look to sell a rally, or if I think it'd be a really aggressive buy, and it would be a buy for a scalp. We're down enough so that if we do bounce here, we'll probably get a trading range out of it. You have limit order bulls who bought the 6 low, limit order bulls who bought the 1 low, so we have magnets above. We have limit order bulls who bought the 8 low, the 9 low, the moving average, the 50% pullback. And a lot of those bulls bought small and scaled in lower. So I think we're going to bounce a little bit. And for the bears, I would wait to sell some kind of a bounce, a lower high. I get rid of that 50% pullback, and instead let's take a look at a measured move down. You can see we're around a measured move down, but we have several support things. We get the 50% pullback, we're below it, but a 50% pullback, the moving average, the 60-minute moving average, yesterday's close, and this tight range. The odds are we're going to start to go sideways and bounce here. All right, so what about a stop entry buy? Parabolic wedge with 5 and 8. Possible low of the day. However, the sell-off is so deep, probably the best the bulls get is a trading range over the next couple of hours. So not a great buy. A lot of bulls will wait to see if we get a micro double bottom and then buy, or they'll wait to see if we get 2 or 3 bars up and then either buy closes or buy below bull bars. And for the bears, as strong as the sell-off is, they have a problem. It's still more likely a deep pullback from this reversal up. So for the bears, I would wait for at least several bars before selling again. Always in bears, I would get out above 11 and wait at least several bars before thinking about selling again. Can you buy for a scalp? Then you have the issue of risk reward. If you're buying for a scalp, you're risking 3 points. Are you trying to make 1 point? I don't think that's worth it. Maybe try to make 2 points. Maybe, I think best choice, wait to see what the next few bars look like. If we reverse up strongly, then the market is back to being two-sided, and traders will be more confident buying even with limit orders. Will the bears sell above 11? We had an example of that over here. Sell off, good bull bar, the bears sold above. This is a much stronger reversal, plus we have a parabolic wedge here. I would not sell above 11. I would wait for at least several bars before thinking about selling. For the bears, a pullback from the breakout to a new low of the day. So theoretically, a low one short, low 12. I would not take that short. We have a strong reversal up, 60-minute moving average. Yesterday's close, we're at support here, and we have a big move up here. So probably buyers below 12, buyers below 11. Bears are trying to get a gap, 9 low and a 12 high. I'm going to wait to sell. 60-minute chart. Right now, the market is deciding what to do. Will the bar close on its low in 2 minutes, or will it have a big tail on the bottom, reducing the bearishness of this reversal down? Market's deciding, is this going to be a reversal that will end the selling for the next 5-10 bars, maybe even the rest of the day? Or do we have to go a little bit lower? I think probably it's a parabolic wedge and probably the end of the selling. Anyone willing to sell below 12? Not a lot of traders will take that sell. Are we always in long yet? I think even if we rally 4 or 5 bars, it's still probably a minor reversal, which means that even if we rally up here, we'll probably have to test back down after this many bars down. So we're probably in the early stages of a trading range. Big up, big down, and now trying to go up big again. What can the bears do with 13 to make traders sell below? I think nothing. So even if 13 looks like 4, the circumstances are different. If it does look like 4, bulls will not buy the 13 low, just like the bulls would not buy the 4 low. However, I think most bears are not going to take the sell. Right now, too many buyers at the 12 low and below. Bears are trying hard to get 13 to close on its low, but because that's the only thing that will slow the buyers down. However, I don't think it'll be enough to attract a lot of bears to sell below 12, below 13. Probably the start of a trading range. This bar, even though it's a bear bar right now, it has not closed, and we still have a minute and a half to go. And I think there are a lot of buyers right around where we are, the 11 high, the 12 low, and 13 may not be a bear bar when it closes. Every tick matters. If it closes near its low, bulls will be less willing to buy the 13 low. If it closes with a 2 or 3 tick tail on the bottom, bulls will be more willing to buy the 13 low, 12 low, 11 low. And for the bears, they see this as a double top with 9, a low one short, but it's a parabolic wedge down to support, a lot of support. Yesterday's trading range, yesterday's close, 60-minute moving average, and there's a strong reversal bar. I would not take the sell. I would wait for at least a couple legs up before thinking about selling again. %50 pullback right here. What about the bulls who did buy above 11? They have a 5-tick trap. It depends on what their goal is. If their goal is a 1-point scalp, they're getting out break even. If they were looking for a 2 or 3-point rally, I think their stop is below 11. If it does fall below 11, it probably will reverse up again, but from a bigger wedge. 1, 2, 3. So the odds are we're going to go sideways to up for, maybe an hour or more. I want to take a look at my examples. Gap up, bear day, but nothing climactic on the way down. Gap up, bear day, some hesitation. Even though it went outside down, it still reversed up sharply. Climactic selling, wedge, big reversal up, and trading range. I think today is going to be a trading range day. Gap up, series of sell-offs, and reversal. Big gap up, probably first reversal down, minor, which means probably a trading range. Same here, strong sell-off, trading range. So I know it looks bearish, but I think the odds are against a big bear trend day. I think it's more likely a deep pullback from a strong rally. Can this be a higher low major trend reversal? Probably not. I think, as I said, I think we're in a trading range. So I think this is a minor reversal down. This will be a minor reversal up, and the market probably is not going to become a big trend day. So more likely buyers around where we are and below 11 than sellers, and the sellers probably will sell higher, a 50% pullback around the 1 low, so up in here. What about the always in bears? They get out above 11. Theoretically, they sell again below a bear bar, 14. So theoretically, they sell again here. But they'll be quick to get out again if we get a second entry buy. I think the odds are we've begun a trading range after the parabolic wedge bottom down to the 60-minute moving average. So for the bulls, this is an opening reversal up from the 60-minute moving average, a strong sell-off down to support, and they're hoping that we get a reversal day up from that support. Important bar here and the next few bars. Will we get two big bull bars? If we do, then this is probably the low of the next several hours. If instead we get a bar with a two-tick tail on top, then we'll probably go more sideways and maybe a little bit lower. So it might be leg one, pullback, leg two. So 15's close is important. If it closes on its high, the bulls who did not buy above 11, some of them will buy above 15. Limit order bulls who bought the 50% pullback have already made a 1-point scalp. I did buy that 50% pullback. I often buy 50% pullbacks when I think there's a reversal. So will most of the bulls scalp their entire position at one point, or will they hold part for a swing? And we'll find out over the next couple of bars. Bears want to get a double top bear flag with 13. And the bulls want a higher low and some kind of a measured move up, leg one, pullback, leg two, or double bottom 12 and 15. Here's the big problem for the bulls. We're right in an area where we spent a lot of time sideways yesterday, so we may just go sideways here more. I think we're probably always in long, but I do not think it's going to become a big bull trend. I think it's big up, big down, big confusion, and sideways, and the market's trying to decide on the top and bottom of the developing trading range. This is a good candidate for the bottom of the range. We may go a little bit lower. This is probably not the top of the range. Right now, 70% chance we've seen the high of the day. So if we're going to get a range, the top of the developing range will probably be, either here or somewhere up in here. Now, what are the bears going to do? I said the always in bears theoretically would sell below 14, but with the parabolic wedge, a lot of them would wait for a second entry short. What do they do with 16? I think it's really difficult to do anything. I certainly would not sell below 16. I think we're going higher. But if the bears break strongly below 15, the neckline of this small double top, maybe the bears will sell again. I don't know. I think it's difficult for the bears right here to construct a good short. We have a parabolic wedge, strong bull reversal bar, 11 at the 60-minute moving average, and this rally is so strong, the first reversal down is probably minor, and therefore the bears are selling at the bottom of a minor reversal. Minor reversal usually means bull flag or trading range. This sell-off is so deep to make a trading range more likely, and that means the bears, if they're selling here, are selling near the bottom of a developing trading range. Will the bulls buy the 16 low? I don't know. It looks like a lot of the bulls who did buy, like the 13 low or the 50% pullback, it looks like they scalped out a lot. I originally had a limit order for 2 points, and then I changed it and got out one tick below the 13 high, so I'm back to flat. I wanted to see a quick breakout above the 13 high, and then when it got there and just stopped, I went flat. Double top bear flag, but parabolic wedge, very good bull bar at support and no double top at the high, and therefore probably a minor reversal. So a lot of reasons not to want to sell too low. When we get a bear trend that I think is probably going to evolve into a trading range, I'll often buy a low one, like below 13, right, or the 50% pullback. But I usually do not buy a low two below 16 if the low two has a bear bar, 16 has a bear bar. Normally, I would be more hesitant if the close of 16 was below the moving average. So I'm not opposed to buying the 16 low. Right now, I'm not planning to do it. I wanted to see a breakout above 13, and we're not getting it. So right now I'm trapped out. I think we will get it. I think we're going higher. When there's a sell climax, a parabolic wedge is a sell climax, especially when it's at a support level, and especially with a good-looking buy signal bar. The market's usually going to get two legs sideways, two up, and therefore a lot of bulls like to buy the first reversal down, confident that there'll be a second leg up. And if 13 closed on its low, a lot of bulls would not have bought it, but because it closed off the low, a lot of the bulls bought it. The bulls have achieved their minimum objective of two legs sideways, two up. They got two legs sideways. I still think we're going higher. So, I'm not opposed to being long here, but I don't like the 5-tick trap above 11, and I don't like the double top, the low too short with the bear bar 16. So I'm going to wait. Not a lot of bears selling, right? Probably always in long. Probably going up for some kind of a measured move. Can you buy on a stop above the 16, 13 double top? Trading ranges are always trying to get traders to buy higher than traders want to buy, and always trying to get them to sell lower than they want to sell. We're in a triangle now. We have three reversals up, 1, 2, 3. We have higher lows and a double top, so it's a triangle. Math, not as good as anyone wants, but I think slightly higher probability that we're going to go up. The bulls who bought above 11, I think they're still on a swing buy, stop probably below 11, maybe 2 ticks below 15. And for the bears who sold the double top, they have an obvious nearby stop above 16. Whenever you have a stop that's nearby, it's probably going to get hit. So that means the probability is we're going above the 16 high. Typical triangle, right? 50% chance we'll get a bull breakout, 50% chance we'll get a bear breakout, 50% chance the first breakout up or down will fail. There's one thing interesting I want to say about this. This is a good looking reversal. Parabolic wedge, great looking bull bar, 60-minute moving average support, yesterday's close, all right? Sometimes you'll get a bottom that fails. However, if you get a bottom that fails and you have a lot of buying pressure and the odds are against a big bear trend day, if you get a bottom that fails, you'll usually try to get a second bottom. So if we break below 11, we'll probably try to form a second bottom. And that if the bulls are able to create a second bottom, it'll have a higher probability of being the low of the day. I am flat here because of the 5-tick trap and the double top bear flag with a bear body on 16. So it forces me to wait for the breakout, up or down. And then if the breakout looks strong, enter on the breakout. Otherwise, wait and maybe sell closes if we get 3 or 4 bear bars, buy closes if we get 3 or 4 bull bars, or look for a reversal, which is, I think, more likely. I think If we get a bear breakout, there'll be buyers below. If we get a bull breakout, there'll be sellers somewhere above, maybe around yesterday's high, maybe around the one low. Slightly more bullish than bearish. Obviously, the bears have momentum down, but the bulls have good context. The first reversal down from a strong rally usually is minor, which means the best the bears get is a trading range. And we have a good reversal bar, 11, at important support, 60-minute moving average. So it's slightly more bullish than bearish. And even if, as I said, even if the bears do get one more new low, it probably would create a consecutive bottoms pattern. And we got a bottom here, and if we break to a new low, we'll probably form a second lower bottom. The bears are still hoping that the day becomes outside down, that we trade below yesterday's low, but we're getting a series of bull bars, 4 bull bars, 3 closing on their highs at the 60-minute moving average. And I think that increases the chances that we're going to get a breakout and at least a small second leg up. It's still possible we could get above the high of the day, but I think, as I said, 70% chance we will not get above the high of the day. Okay, bar 18, 90% chance we have seen either the high or low of the day. At the moment, it's more likely that we've seen the high of the day, but if we get 1 or 2 big bull bars, then it becomes 50-50. And if we keep going up, then it becomes 90% chance this is the low, and 30, 20, 10% chance this is the high, depending on how high up we go, if we go up. But right now, 90% chance either 11 will remain the low of the day, or 3 will remain the high of the day. And right now, it's slightly more likely we've seen the high of the day. But even if we do break below 11, I think probably buyers not far below. With the 5-tick trap and 2 attempts to get a 1-point scalp, a lot of the bulls stepped aside. However, for me, it's not enough to get short. We're at the apex of a tight trading range, and the problem, if I'm scalping, I need high probability, and the probability is never high in a tight trading range. So, you have to, that means stop entry traders is low probability, higher probability for limit order traders, but the range is so tight, I'm going to wait. What I would like is either a test down, reversal up from around the 11 low, maybe even from a lower low, a series of bull bars, 2 or 3, 4 bull bars, and then buy the close. Or, I still have a hard time trying to come up with a scenario that would make me want to sell low. I still think it's big up, big down, big confusion, and trading range, and we're already down fairly low. So I don't see what the market can do down here that would make me sell down here. I'm willing to sell up here. And that also makes me think it's slightly more likely that we're going to go up, since I cannot see a reason to sell down here. So if you cannot sell low, the market probably has to go up to find sellers. Still on the swing buy above 11, and therefore bulls can buy above 15, above 18, above 20 if they're looking for a swing up. And for the bears, I think it's slightly more likely that we're going to go up. So I have a hard time seeing what the bears can do to sell unless we start to collapse, which I think is not likely. We're getting too many bull bars closing at or near their highs, and that's never a good thing if you're a bear. Will the bulls get their breakout here? Will we start to accelerate up? Minimum goal, measured move up based upon the most recent higher low, which should be up there. It's really not a clear leg 1, leg 2 setup. So leg 1, pull back leg 2, takes us around the same area. It's important for the bulls to get 2 ticks above 16. If they do, then we'll probably get a measured move up. Whenever you have 3 or 4 attempts at a certain price, I call it a ledge, and sometimes ledges hold really well. We had a ledge here for 4 bars and got the reversal. The bears are hoping that this is a ledge and that they get the reversal. Here with the ledge, every time I get down to the price, it reversed up. Here, every time we're getting up there, it's not reversing down sharply. A little bit of a ledge here, 3 bars, and it held. The bears got at least a minor reversal. A ledge here, 1 tick bear breakout. That's why I was talking about a 2 tick bull breakout. A lot of times you get a 1 tick breakout below anything. Here a ledge, and it leads to a reversal. Kind of a ledge, and then a ledge here, 4 bars, and then 4 more bars, so 8 bars trying to get above that price, and eventually the bulls gave up, and we got a leg down. So even though we're getting bull bars closing on their highs, until there's a breakout, there is no breakout. As I said, if the bears do get a bear breakout below the triangle, probably will not fall all that far. We may get a new low of the day, but if we do, we'll probably get another bottom attempt. Bears trying to get their breakout. Bulls keep failing. Bears keep failing. Breakout mode. Higher low 20. Bears want to break below the higher low. Difficult to short because you're shorting at the bottom of a tight trading range right at good support, the 60-minute moving average. Are we still always in long? Probably not if we get below 20. When you get a parabolic wedge, very often you go sideways for 10 or more bars. It usually stops the selling, but it does not necessarily lead to a bull trend. This is the end of the second hour, but a 20-bar tight trading range, so nothing to do on the 60-minute chart except bet that we'll stay sideways, which means probably buyers below bars, sellers above bars. I am flat, waiting for the market to break out up or down, and I'm more inclined to bet on a failed breakout. If a breakout is very strong and very big, then I might take a quick scalp in the direction of the breakout. But big up, big down, big confusion, the odds favor a lot of trading range trading today. Bulls still hoping for a higher low, leg 1, leg 2. They're hoping this is the start of leg 2, so leg 1, and then a trading range, and then leg 2. Now that we've broken below 15, is it higher probability to buy above the ledge? Sure, but selling at the bottom of a tight range is a low probability bet. Buying above the range, also a low probability bet. So best choice is to wait and hope that we get a chance to buy lower or a chance to sell higher. It's a failed breakout of yesterday's high. Similar to this, strong rally and then a sell-off, and we sold off for a lot of bars. We held above this low. Anyway, this is a similar thing where you had a very strong rally on the open, and it was a failed breakout of yesterday's high, and we reversed down. Here, it traded down for several hours, and today we traded down, and we're going sideways, deciding whether to go more down and then reverse up, or reverse up. And if we do reverse up, we'll probably be in a trading range. I doubt we're going to get that. Bulls continuing to fail to get their breakout increases the chances that we're going to drift down. But again, unlikely to become a big bear trend. The bears are still hoping to get below yesterday's low and form an outside down day. I think we're always in short since 24 broke below 20, and we keep failing to get above the ledge, but not a high probability sell at the bottom of a tight range like this, especially with support just below. I am flat, and I've been flat for a little while, or for a big while. Bulls are hoping for the higher low. Bears now have a slight lower high, small lower high, and a small lower low. So the early stages of a bear trend, even though we're still in a trading range. I am flat because the probabilities are too close to 50-50, and the stops have to be too big, and the profit is probably a scalp. So if the stops are big relative to the reward and the probability is 50-50, hard to make money unless you're willing to use wide stops and scale in. Bear is trying to get the break to a new low of the day, and then they want to get down to yesterday's low. I showed that example where the market had a huge reversal but held above the bottom of the rally. And the bottom of the rally is 76 or 69 yesterday. Slightly more bearish than bullish, but really not all that bearish yet. It's very close to 50-50. Bulls want to keep above the 11 low. They're hoping 11 remains the low of the day. But even if it breaks below 11, probably buyers not far below. So pretty difficult to do anything right here. Bears trying to get a gap below 24, and then a measured move down to a new low. I thought about selling the 28 high, and by the time I made up my mind, it was already below the 28 high. Bulls want a major trend reversal. They're trying to prevent the bears from getting a gap. They would like 30 to look like 11. If they do, bulls will probably buy above the high. So for them, it would be a higher low major trend reversal. Bear trend, bull breakout, and a lot of sideways bars, even though we did not go up very high. And then a higher low major trend reversal. 30, not a good enough buy signal bar. 5 bars without a bull body. Only 1 bull body in the past 8 bars. So not enough buying pressure for bulls to buy with the stop above 30. We're still always in short, but tails below bars at the 60-minute moving average and at the support of the 11 low. So best choice here is flat. Bears trying to get their breakout. Will bulls buy the 11 low? I don't know. I think the next target is yesterday's low, so a lot of the bulls might wait. And for the bears, I think they're selling above bars. They sold above 24, they sold above 28, they sold above 31. They could be swing trading, but I know they're probably scalping at least part. You can tell because every time it goes down about a point or so, it goes back up. So the bears are buying. The bulls are not buying. We're getting too many bear bars. So the little bit of buying that we're getting is probably more from bears buying back their shorts. And then when they see the bulls can't reverse, they sell again above a bear bar for another scalp. Bulls, they need to get some bull bars. We've had 1 bull bar in the past 10 bars. If they get a bull IOI here, especially with a pretty good bull bar, bulls might buy that. Double bottom, major trend reversal 11. But right now the bulls do not have a good enough reason to buy, so they need to get some bull bars. Nobody's buying. We're trying to go down to find a price where the bulls will buy. The bears are hesitant to sell around the 11 low, 60-minute moving average. They're still trying to get below yesterday's low and get consecutive outside days. Unusual, but sometimes happens. Dangerous selling too low. You got to be quick to make decisions. Unlikely to become a strong bull trend. Unlikely to get this. Right, we have far more bear bars than what we have here. If you can see, there are a lot of bull bars in this channel. And today it's a lot of bear bars. So it makes bulls hesitant to buy the first reversal up. Can you keep selling highs above bear bars like they've been doing pretty much for the past 10 or 15 bars? No, I would not. We're not breaking strongly below the low of the day of the 60-minute moving average. So we're probably going to go sideways here. And the bulls probably need to get some bull bars before bulls will buy. A bear channel can go on a long, long way. But we're at support, 60-minute moving average, low of the day. The bulls can argue lower low, major trend reversal. I would not take the buy yet, but I would stop selling and wait to see what happens here. We're probably going to go sideways for a few bars. Channeling down, not getting a strong bear breakout. We're at a support level, so a lot of the bears are going to wait here and the bulls 8 consecutive bear bars, I would wait either for a very strong reversal up or for the market to go sideways and start to get some bull bars, and then look for a micro double bottom or possibly a limit order buy below a bull bar. But right now, I think best choice is flat and waiting. It's really interesting. The bears, you can say they sold above 15 a bull bar, but it's actually also above 14 a bear bar. So they sold above bear bars here, and then 21, and then 24, and then all the way down. So it's like 5 or 6 times that the bears did that. Lower low, major trend reversal, micro double bottom, but too many bear bars. So I would wait for it to go a little bit more sideways, maybe form a low 2 bear flag, and then one more little push down to a wedge, 1, 2, and then 3, and look for a bounce up. Again, I think the odds are against a big bear trend day. I do think we're going to rally, but this is not yet a convincing bottom. Limit order bulls made money at the 34 low. Again, a sign that it's not going to be a big bear trend. What do you do here? Probably bulls will buy below bars and bet that we will not get a big bear breakout. For stop order bulls, I think the bulls need a better bottom. So, like I said, we might get a small wedge, 1, 2, and then 5 or 10 bars from now 3. Alternatively, the bulls need a strong breakout. They had a good bicycle bar here, but not a strong reversal. And for the bears, they keep selling above bars below the moving average. And some bears will sell this, but I don't like 4 bars stalling at the 60-minute moving average and the low of the day. So I'd rather sell higher. I think we're probably not going to go much lower. This is bar 36, the final bar of the 3rd hour. And so far, we have 2 bear bars, and this current 3rd hour looks like a bear bar as well, but prominent tails, small bodies. It looks like a bear leg in a trading range. And the 5-minute chart looks like a bear leg in what will become a trading range as well. So probably not a lot of downside risk for the bulls here. Bulls need to get above the ledge, but even if they do, we're probably not going to go to a new high of the day. Once you drop below that 18 bar range, here's bar 18, this is the low of the 18 bar range, 90% chance you're not going to get above the top. So probably not going to be a big bull trend day. We could still get a reversal. We could get back up here and close at a new all-time high. But right now, 90% chance we've seen the high of the day. Let's say we get 4, 5, 6 bull bars. And then instead of 90%, it drops to 80, 70, 60%. But right now, at this moment, it's 90% chance we're not going above 3. I don't know that we're going to go a lot lower. This does not have much energy. So I think we're probably in a trading range since bar 11. We tried to find the top of the range, and we discovered that this was it. The market's now trying to find the bottom of the range. This might be it. If not this, probably not much lower, and therefore bulls are willing to buy, use wide stops and scale in lower. But I think bulls would prefer to buy with limit orders below bars than with market orders on the rally. We failed at the moving average many, many times today. So not a very good location to buy. However, I think, as I said, we're in a trading range, and this might be the end of the bear leg. When you have days that are probably going to be trading range days, today is one of those days, the market usually tries to bottom around 2 hours, bar 24, and if it fails, then it tries again around 3 hours, bar 36. So we're at that time right now. We got 30 seconds left to the 60-minute bar, and the market's deciding whether to get a bull body or a bear body. bar 24 closed the second hour. The third hour began with bar 25. So the open of bar 25 is the open of the third hour, and the bulls are trying to get a close above that 25 open to create a slight bull body on the 60-minute chart to erase some of the bearishness. Okay, consecutive bull bars. Third time today we've had 2 consecutive bull bars. So 1, 2, and now 3. Not big. We know bulls will buy new lows. They made money buying below 20, below 24, below everything, below 34, using Y stops and scaling in. They probably will buy below a bear flag sell signal bar, 36, knowing that even if it falls to a new low, the bears probably are not going to get a strong breakout, and there'll be buyers below. Are we always in long yet? I think the bulls need to do more, but as I said, I think even if we go to a new low, we're probably not going to go a lot lower, and we're not going to go up or down very fast. So probably buyers below 36, buyers below 35, but the bulls probably will be mostly scalping, just like the bears scalped on every one of their sells. What about the limit order bears who sold the 33 high? It's been a very good strategy all day, selling above a bear bar in the bear channel, and therefore it's reasonable to do, and therefore the limit order bears who sell the 33 high and who sell more, 1 or 2 points higher, probably will make money, and that means that even though we're trying to reverse up, at some point in the next 5 or 10 bars, we'll probably dip down below the 33 high to let those limit order bears get out break even on their first sell, and then with a scalp profit on their higher sell. Bears, therefore, will buy around the 33 high. They'll buy back the shorts. That's been the strategy. They'll sell the high of every bear bar for the past 2 hours, and they did it again 33, and I think they'll change their mind. They'll be disappointed by 35, 36, and therefore they will look to get out without a loss on their sell at the 33 high. So the bears will be buying at the 33 high. The bulls know that, so they'll be buying around the 33 high as well. And as I said, the bulls will buy below 36. They'll buy below 35, betting that at the best the bears will get here is a broad bear channel or a trading range. Bulls have been making money repeatedly here. Are we always in long? We probably are. So bulls are buying. Odds are they'll buy below bars. The bodies are shrinking a little bit, but it looks like traders have decided that we'll probably get a couple legs sideways to up here. So buyers below. Some bulls buying closes as soon as they see that third bull body, they buy the close. And you can see the open and low of 38 is at the 37 high and close, and that tells you that when the bulls saw that bull close, they just bought the market. But chances are we'll get a pullback to the 33 high. Can you buy on a stop above 22? Well, I talked about big up, big down, big confusion, and trading range. And the market was trying to find the top of the range. And now it's trying to find the bottom of the range. So now we have a reasonable candidate for the bottom of the range, a reasonable candidate for the top of the range. Buying on a stop above the top of the range is a low probability strategy, just like selling on a stop below anything is a low probability strategy. It's a quiet trading range, and better to be buying below bars with limit orders and selling above bars and scalping. I think this is probably a sell zone. We're about a point above the 33 high, and as I said, I think we'll pull back there. However, the reversal up is strong enough so that whether or not we pull back there, we'll probably get at least a small second leg up. Is it more buy the close or sell the close? 37. Well, I think we're probably always in long, but I also think that over the next few bars we're going to pull back to the 33 close. So I think if you're buying, it's probably better to wait to buy a pullback. Good breakout for the bulls, clearly always in long. Again, I would not buy on a stop above 22. We may get, well, there's a decent chance we'll get back to the open of the day, and that the day will end up as a doji bar on the daily chart, like this. Open and close right around the same price, probably open and close right around the same price today. Sometimes when you break out above a ledge like that, instead of rallying strongly, you just end up going sideways around it. What about the bears getting out down here, 33 high? Well, the higher up we go, the more likely they're trapped, just like the buy the close bulls up here. The lower we went, the more likely they were trapped. Will we get all the way back up to the 3 close to allow those buy the close bulls to get out? I don't know. I still think the odds are against it. But as I said, the higher up we go, the probability that this remains the high of the day drops. Is it still 90%? No, but it's probably like 70 or 80%. But if we get 1 or 2 more decent bull bars, it'll continue to drop. Trading range or bull trend. Either case, bulls need to stop down here. Right now, we've probably seen the low of the day. Pick a number, 60% chance. And then if we go a little bit higher, then 70% chance. Bulls can only buy here if they're putting a stop down here. And the bears, I think they're trapped out, at least for a few more bars. Some will sell here because they made money selling 1 tick below that high for the next 10 bars or so. So some will take the sell. I would not. Buy climax, so a magnet at the low of 39. If we do get there over the next few bars, probably buyers around there and probably buyers around here. The bulls bought, they bought. So if we come back to that price, which is around the 39 low, bulls will probably buy again. Will the bears sell below 40 for a double top 22? With 6 bars up without a bear body? I would not. You'll have the limit order bears who sold the 33 high, and they'll scale in. Some sell more 1 or 2 points higher. Others will look for a bear bar and sell more below the bear bar, for example, 40. But I think the case for the bulls is better than for the bears. I think we're always in long. So it's probably better to be looking to buy below bars. If 40 closes on its low, a lot of bulls will not buy the 40 low. They'll wait to see what we get over the next 2 or 3 bars. What are the chances that the market will do what it did here, have a bear bar closing on its low, and then have a big sell-off? I think small. The bears should not have allowed 4 bull bars here. So probably sellers below, and the buy zone is around the 14 low and the 33 high, which is around the 50% pullback of this rally. So 50% near the 33 high and near these lows where the bulls bought earlier today. Bulls and II bull flag, but right at resistance. Unlikely to get a strong breakout above the top of the ledge. We've been in a trading range now for 30 bars. And when you have a trading range, sometimes you break to a new low, but usually reverse up. And sometimes you break to a new high and usually reverse down. What's different here is that we have a ledge, so there's a potential for some kind of a measured move up. But I think bulls would rather buy a pullback than the breakout. And for the bears, they're hoping 40 is like bar 4 and the start of a big bear trend. But more likely, there'll be buyers 50% pullback and around here where the bulls bought before. Bears are hoping to get down to that 33 high, but I'm not sure that they will. Bull III, 3 consecutive inside bars, always in long, but at resistance, I think bulls would rather buy the pullback than the breakout above the 22 high. I'm going to try to make that a little bit more accurate. I think better than a 50-50 chance we're going to get back to the open of the day at some point, maybe soon, maybe after a pullback. But the day is probably going to end up as a doji day, closing around the open. Will the bears sell with a stop here, a double top 22? Sometimes you get these double top bear flags that just do not look good. Yet, you get the sell-off below the neckline and the measured move down. Normally, if you have a strong bear trend and you get a double top bear flag, I say there's about a 40% chance that you're going to get the swing down below the neckline. Here, I think it's less than a 40% chance. All of these sideways bars have pushed the bear trend far to the left and reduced its influence. Bulls want to buy lower. Bears want to sell here, but they know the odds are we're going higher. We just don't know if we pull back and then go higher or go higher and then pull back. I think we're always in long. And I think 60% chance we've seen the low of the day and probably 70% chance we've seen the high of the day. But I also think that better than 50-50 chance we're going to get back to the open before the end of the day. Will we get a measured move up? I don't know. We have obvious magnet open of the day, and then yesterday's high and the all-time high, and then today's high. Breakout here, still probably better than a 60% chance we're not going to get all the way up to the high. Bears want the breakout to fail, but pretty tight bull channel. No, I would not sell. By the way, I talked about this as a lower low major trend reversal. I also think of it as a wedge, even though it does not look like a wedge. Reversal up, second reversal up, third reversal up. So it's like a wedge that just does not have good shape. A lot of bears would not sell the 40 high, but they might sell 1 or 2 points higher, especially around the open of the day. Odds are against this just going straight up. It's clearly bullish, so it's better to be long, but I think a lot of the bulls who bought below things, 43, either will scalp out with 1 point, try to scalp out with 2 points, we need one more tick, or they'll scalp out if we start to stall. Stop order bears, failed breakout of a double top. The channel up, I think, is too tight for a stop order short. Bulls want a measuring gap here. They'll try to keep 46 from dipping below the ledge top, but I still think it's going to be mostly a trading range day, and therefore we could easily dip below that line. We're probably in a swing up that'll last 2 or 3 hours, maybe the rest of the day. The bulls want a reversal day where you sell off the first half and rally the second half, like this. But so far, this has much more energy than what we have so far today. Another reversal day. Did not get to a new high. This one did get to a new high. This one did not. Most reversal days, if the initial sell-off is big, like today, most reversal days do not go above the high, or if they do go above the high, they do not get far above the high. They do not get far above. Low 2 short with 43, failed breakout. Whenever you have a double top and a breakout, you have 3 pushes up, 1 pullback, 2 pullback, 3. If you get a failed breakout, for me it's a type of wedge. You also can call it a wedge with 1, 2, 3, either one of these for 1. But the channel is so tight, I think buyers below. Remember I said that when you have a ledge and then it breaks above the ledge, a lot of times, rather than going up far, it just starts to form a trading range around the ledge. I think we're going to get to the open of the day, whether or not we pull back first. If we do pull back, buyers below. A lot of trading range price action. Open of the day, middle third of the day. Usually means the market has to test back near the open of the day at some point in the second half of the day. Obviously, traders would love it to pull back deeply because they know we'll probably get a second leg up, and they would have more profit potential if it goes down because they know it's going here. They'd rather be able to buy 4 points below that than 1 point below that. Well, yeah, will the bulls buy the 45, 46 low? If it has a 2-tick bear body, I would not. I would look to buy lower. Okay, it does have a 2-tick bear body. And will the bulls buy above 46? A pullback from the 45 breakout. We have a magnet above the open of the day. I don't know. I think a lot of bulls will wait for a pullback and buy around the 44 low, the moving average, or a 50% retracement. %50 pullback right now is there. Bulls want a new high of the day. The odds are they'll get to the open of the day sometime in the next hour. It looks like they're trying to get there now. But again, the odds are against a strong breakout above the new high. So even if we do get above the high of the day, probably sellers above. This is probably going to remain a trading range, and the market is simply deciding where the top of the range is. Open of the day is always a magnet when it's in the middle third of the day that has a lot of trading range trading. For the bears, an expanding triangle. For the bulls, a pretty good reversal up 50, and they view this as a pullback from this reversal up, and they expect the market to go higher. I think we're still always in long, and I think we have a big magnet at the open of the day, and therefore it's still always in long, and still bulls will buy pullbacks. We had a channel down, traders selling above bars. We have a channel up, bulls buying below bars. So expanding triangle, but I think more likely we have to get to the open of the day, whether or not we trade down first. If we do trade down first, probably buyers around a 50% pullback. So around the 50 low. limit order bears made money selling both the 39 high, the ledge top, and the 45 high. So bears are starting to make money selling above bars. Reduces the chances of this being the early stages of a big bull trend. Increases the chances that it's a bull leg and a trading range day. We have an obvious target a little bit above the open of the day. Sometimes the market pulls back into 11:30 and then tries to resume what it has been doing. I still think we're going to get to the open of the day, and therefore the reversal attempt here, double top, is probably going to fail. So we'll probably go here, which is at least a couple of points above where we are. It would be good for the bulls if it fell 4 points, then they could get possibly 4 points on the reversal up. Right now, probably 70% chance we've seen the low of the day, 60 or 70% chance, and at least 70% chance that we've seen the high of the day. So that means we've probably seen both the high and the low, and then the market has to decide what to do between now and the close. I think it will probably get to the open of the day, but it may pull back further first. It reversed up from the 60-minute moving average here, and then again here. I don't know that we'll get all the way down there this time, but we may pull back to about 50%. Which is right around the 50 low. Sometimes you get these channels that just don't look like computers will pay any attention to them, but in fact computers often do. So a channel like this, where the market views this as an outlier and that the market's trying to form a channel, you don't know in advance where the bottom line is until you get the reversal down from the top. So I think there's probably support around here. Well, the bears double top here, expanding triangle here, breakout test one low, but I still think the odds are we did not get close enough to the open, and therefore the sell-off that began 6 bars ago probably will result in a higher low. You had bulls buying below 4 and buying more above a strong bull bar, either 11 or 35. So let's say they bought the 4 low and they bought more 1 tick above 11. They were unable to get out break even. If instead they bought 1 tick above 35, they were able to avoid a loss. And you have limit order bears who sold the 33 high, and they're looking to sell more below a bear bar, maybe here. So they'd go short at the 33 high, and then below a bear bar that's at least a couple points above. So maybe there, and they need to get a couple ticks lower to avoid a loss. So you'll have some bears buying around here. And you have bulls trying to keep a double bottom 50. But I suspect that we'll go a little bit below 50. I think we're still always in long, and I still think the odds are we're going to end up closing around the open, and the day will be more of a doji day than a bear trend day. my buddies is a Superior Court judge for the state of California. And last year, he saw me shopping in Walmart, and he was shocked. And he didn't understand why I was shopping in Walmart. I'm really kind of, I grew up poor, so I feel very happy in Walmart. But I also told him that I get a kick out of Walmart. I think they're a very well-run company. And so I enjoy going to successful businesses, even if they're kind of low class. In-N-Out Burger is one in California. Pollo Loco is another one in California. Even though they're cheap fast food places, I get a kick out of going to businesses that are run well. Warren Buffett still eats lunch at McDonald's every day. He goes through the drive-thru and picks up a hamburger every day. Anyway, going back to Walmart. Let me put up a daily chart of Walmart. This is Walmart today. They're announcing that their online sales are doing very well. And of all the different companies out there, I think they are the only one that is a serious competitor to Amazon. And, their stock price is reflecting it. Walmart is boring. It's a boring, low-end store. But look at the stock price, right? Right. For a boring store, they're doing something right. And if you do online purchases, I buy a whole bunch of stuff online. Almost always I'm choosing between buying on Amazon or buying on Walmart. And that's because, I think Walmart is very good. I think they are competitive with Amazon. So I enjoy hearing all the little things that Walmart is doing. When I think of Walmart, I also get a kick out of Macy's. However, they just are totally messed up. Here's Macy's daily chart, Macy's weekly chart. They're not spending the money on online presence. If you go to their site, their online experience is horrible. Walmart is just as good as Amazon. They're indistinguishable. Both are excellent. And Macy's online, they're horrible. And I don't understand why they're choosing to remain horrible. They've lost 70% of their stock price over the past few years. And I think it's mostly because they're not spending the money to develop a really good online store. And Walmart is doing great. And, their stock price is going way, way up. Bulls looking for a bottom. They expect a higher low. We have a lower low, major trend reversal, and a decent reversal up. And when that happens, the market usually gets two legs up. It's possible it's already had the two legs, one pullback, and then two, an expanding triangle. But this entire rally is in a fairly tight channel, and that usually means it's the first of two legs up. So this is leg one, and we're getting the pullback, and then we'll try to get leg two sometime before the close. Sometimes you don't get a move until the final few bars, like yesterday. We had two big bars here in the final five, and yet they covered a lot of points. Anyway, the bears were selling above bear bars for 20 bars, and they sold above 54. They sold above 57 bear bar, hoping to repeat this, but this looks flatter, and it's following a pretty good reversal up. I don't think the bears are going to be successful this time. I think it's more likely this is going to form a higher low. The market is looking for the bottom of this sell-off. Bears are hoping that it gets one tick below the 33 high for the limit order bears who sold there to get out without a loss. But even if it does get one tick below the 33 high, I think the odds are that will be the end of the sell-off. So I think the bottom is somewhere between where we are and one tick below the 33 high, which is about a point or so below where we are now. Buyers 50 low, bulls trying to get an IOI 59 for second entry buy. I still think the market's always in long, and the bears are trying to get down to the 34 high. I'm not sure that they will. we're around a price where they can get out, break even. So had they sold the 33 high and then they sold more below a bear bar, maybe they sold here below that bear bar, and that's their average price. And it looks like a lot of them are buying back their shorts here. So the bears are probably giving up here. Stop order bulls might buy above 59. Looking for a move up to the open of the day. Where do the bulls put their stop if they buy here? Well, they can always use a tight stop below 58, but they're probably better off using a wide stop below the low of the day, because fairly tight bear channel, and we still have to target a magnet below at the 33 high. Limit order bulls bought the 50 low. They'll buy below bars, below 59, below 58. And for the bears, I would not sell down here. Bears want lower highs, but this is a wedge bull flag, whether or not we get one more push down. Limit order bulls 50 made money. Limit order bears, I would not take the short. I think we still have that magnet at the open of the day. I don't know that we get there. We're pulling back a lot of bars, and that reduces the chances right now, probably 50-50 chance we'll get there by the end of the day. This is a higher low major trend reversal. We have a bear trend sideways for enough bars to make this a lower low major trend reversal. It's also a wedge bottom. 3 pushes up, 1, 2, and 3. The odds are we'll get 2 legs up, 1 pull back, and then 2. We do not yet know if this is the start of 2 or if we go a little bit lower and then have the second leg up. And traders are buying with limit orders, below bars, and scalping. For the bears, even though we're in a bear channel for 10 bars, the reversal is good enough up to make me think we'll try to get a second leg up, and then we have a magnet at the open of the day. And plus, I think we're always in long. So to sell this far below the high and above a bull bar, I would not do it. Some of the stop order bulls, 59, are getting impatient, and they might sell out of their longs, and we may get one more push down to a bigger wedge. Right now we have a wedge with 44 and 50, but we might get one more push down. We still have the limit order bears 33, who are holding on. Some of them are holding on. Most are out, but some are holding on, looking for a test of the 33 high. Here we get back up to the high of the day. I still don't think so. The bulls are trying to get up to the open for a second leg up. Leg 1, pull back. Leg 2, a lot of the bulls will scalp out with 1 point, but they still have a 50-50 chance of getting back to the open. Looks like a lot of the bulls are scalping out for 1 point. Not much energy. Sometimes in the final half hour you get a trend. Could be up, could be down. We're still always in long, and we may get to the open of the day, although I'm less certain. It looks like most of the bulls who bought above 59 or below 50 or below 61 scalped for 1 point. This is not a particularly good sell. I think we're still always in long. For the bears, it's a lower high, and they're hoping to get a test down to the low of the day or the 60-minute moving average. But more likely, there'll be buyers not far below. I would not buy with a limit order. It's 2 legs up in a trading range, leg 1, pull back, leg 2, and has a bare body. And it's after an expanding triangle top, or you can call it a wedge top. And the bears might get a second leg down. Sometimes you get trend resumption down late in the day after a strong initial sell-off. So leg 1, pull back, and leg 2. it really looks very quiet. So I would not do anything right here. We're around the time window when the market often has a trend, but there has been so little energy since bar 12. We had a little bit of a rally here, but really not much energy, and it reduces the chances that we'll get much of a trend at the end of the day. The bulls are trying hard to get back to the open of the day, and if they succeed, I think the rally will have a hard time going much beyond that. So, the best the bulls probably can do is get a close that is about a point above where we are. The bars are 2 ticks tall, 3, 4 ticks tall, and mostly in a tight trading range for 2 hours here and then another hour here. That usually does not result in much of a trend at the end of the day. What happens if we get to the open of the day? We'll probably end up closing within a point of it. I think difficult to hold long after 72. We're still always in long, but top of a tight trading range, and the magnet is only another point above where we are. And for the bears, I would not be shorting. It's unlikely that we'll get a credible sell signal. Usually if it's sideways by 12:45 or so, it's not going to be a buy the close or sell the close day. It's usually going to finish sideways. And with the range as tight as it is, I usually do not even trade with limit orders. I sometimes trade with limit orders in a tight trading range after 12:45 if the reversals in the bars are big, but that's not the case here. Can it still be a sell the close finish? Probably not, because it'll have a hard time falling below the 60-minute moving average. By the time you decide it's sell the close, it'll be right at the 60-minute moving average. So it's probably better to do nothing. Bulls got their target, bar 78. I think it's pretty difficult to trade it because the reward is not big and the risk is big relative to the reward, and the probability is not as high as you want. So even though it's always in long, which means it's more likely to go up than down, it's not that much more likely than not, and then you have the problem with risk and reward. Overall, even though the day was mostly sideways, there were some things that I thought were interesting. We had that really strong rally on bar 2. The odds were high, we were going higher. And then we had a consecutive bull bar on 3. So we're always in long, and the odds are we're going higher. And then when you had 4 closing on its low, the odds were no longer that we're going higher. And as I said, I always get out of longs in that situation because 50% of strong trends on the open, no matter how strong they are, will reverse, and you'll get the high of the day or low of the day. And then I said at the time that 100% of the time, if bar 4, you get 2 bull bars and then you get a decent bear bar closing on its low like that, if I'm long, 100% of the time I get out, and sometimes I get short. I did not short below 4 today. Bar 6 was interesting. The bears wanted 3 consecutive bear bars. They had that bull bar, and I think that was kind of a warning that today was probably not going to end up as a big bear trend day, even though we got a big bear trend on the open. And it was sell to close. 5, even 6 is probably sell to close because there are sellers above and we're probably going at least a little lower. And then all the way 7, 8, 9. 10 is one of those bars when I do not sell to close because the size of the body increased. And when you get an increase in the size of the body a little bit late into a trend, it's often the market reaching for support at the end of the trend. In other words, a sell climax. And then also, I mentioned that it could be a parabolic wedge down, which it was. And then we had a very good bull bar on bar 11, but I said it was probably a minor reversal. I said the entire sell-off was probably a minor reversal from the rally up from yesterday's low, because the rally was in such a tight bull channel. The odds were the first reversal down would form a higher low, that bulls would buy it, even though it was very strong. And the opposite is true when it tried to reverse up. The reversal up was probably going to be minor. It was probably going to be tradable. The bulls could make money, maybe a scalp, but the reversal up would probably be minor, and the bulls would need a major trend reversal before they could get a bigger reversal up. And that was the case today. So we had a parabolic wedge bottom, bar 11, great looking bar, opening reversal up from the 60-minute moving average, strong sell-off down to the support of the 60-minute moving average in yesterday's close, strong reversal up, probably minor. And 5 times the market hit the limit order for the 1-point bull scalpers, and each time was a 5-tick scalp. The bears tried to reverse down, resume down, bear trend, resume down, but the odds were that we would not get below yesterday's low. Too much of a big up, big down pattern, so probably big confusion and a big trading range. And the bears who did sell, they were selling above every bear bar from bar 14 down. The bears who did sell were scalping. Every time it would get below a prior low, you get a tail. You get a tail. That means that bears were buying back their shorts, and bulls were buying as well at new lows, and the bulls were making money. And if it's a bear trend, the bulls should not make money easily. It should be very difficult for the bulls to make money, yet they were making money repeatedly. So this was probably a bear leg and a trading range. Also, I thought even if we went all the way down below yesterday's low and formed an outside down day, I thought the odds were there would be buyers below. So I thought we would enter a trading range, and the market had to find where the top and bottom of the range was. And for the first couple of hours, this was the top and this was the bottom. Down here, I mentioned that bulls were making money buying below bars. They probably would make money buying bear flags, a low one bear flag, instead of waiting for the low. And then we get the reversal up, 35, 36, 37, 3 bull bars, 37 closing on its high. I thought at the time we would come down to the 33 high to allow the limit order bears to get out. They were making money selling above bear bars all day long, right? So chances are selling above 33 would be profitable as well, although I wouldn't do it because I thought we would get some kind of a double bottom with 9, which we did. And the bears who did sell above 33 got trapped, and they never were able to avoid a loss. A lot of them get out on the third bull close. It looks like bar 39. A lot of them gave up there, the ones who were holding, hoping that we'd get back to the 33 high. It looks like they gave up here. And the bulls failed again at that same ledge. However, they got a high 2, a little pop up, and all the bars just became small, and we got reversals every 2 or 3 bars for the rest of the day, and we stayed in a pretty tight range. For stop entry traders, above 2 made sense. Below 4 is okay. It's also okay to wait for either 2 big bars, 4 or 5, or 3 or 4 consecutive bear bars. And 7 is the third bear bar, 8 is the fourth, and then sell. But you're right at the moving average. You're right at the 50% pullback. Yesterday's trading range, we stayed sideways there all day. We may end up going sideways there today, and we did. We went a little bit below it, a little bit above it, but basically we were within a couple points of this tight range all day. Tight channel, terrible for stop entries, bulls or bears, because it's more of a limit order pattern. The bears sell above bars betting on a new low. The bulls buy below bars betting on a pullback. And that's what it was through here. So not good stop entry buying. I thought buying above 11 was okay. I forgot how I bought. I know I bought before the 11 closed, and I ended up scalping out. I may have bought the 13 low as well, or the 12 low, somewhere in there. And this was limit order trading. I thought we remained always in long. But when 24 fell below 20, a decent bull bar here. So decent bull bar broke to the upside, decent bull bar here broke to the upside. When we fell below 20, I thought we were probably always in short. However, I also thought that there would be buyers around the 10, the 11 low and around yesterday's low if we got there. But not good stop entry trading. You can see most of the bears were selling with limit orders at the high of bear bars, and then they finally got trapped here. If they took that sell, they buy back 37, or they try to sell more above a bear bar all the way up here, and they found themselves trapped, and they ended up losing money. Stop order for the bulls above 9 made sense, but I think you have to get out below a low 2 and a bear trend, so you get out below 16. Hard to short with stops because we were still always in long until 24. And then here, not a great stop entry buy above 35. It was more buy the close on 37. And then through here, I think we stayed always in long for the rest of the day, so I'd rather be looking to buy. But I was buying with limit orders below bars, not stop orders above bars, because we're probably in a bull leg in a trading range, and I don't want to be buying too high. 59 was the one place that I thought was a decent stop order. Buy an IOI, a wedge bull flag, higher low major trend reversal after a lower low major trend reversal, but did not move up much at all. And we got a little pop at the end. 75 was another possible buy for a high 2 with 70 for a possible move up to the open of the day, which we got at the end of the day. Buy the close, sell the close. 2, buy the close. 3, tricky because of that big tail. I personally did not buy that close. And then 5, I thought it was enough big up, big down so that we would go sideways. And I thought it was okay to sell the 5 close. Selling with a stop below 6 because of the bull body, I would not do it. And then it was sell the close 7, the third bear bar. 8, 9, we have a micro double bottom at the moving average and a 50% pullback, and we're around the support of yesterday's tight range. So probably not great sell the close. And then 10, I thought there would be buyers around yesterday's close and a 60-minute moving average. So if you sell 10, a bigger bar, you're betting on a measuring gap. It may be an exhaustion gap. So I think you have to be careful taking that sell the close. And then here, you got 3 or 4 bear bars, 29, 30. Is it sell the close? I don't know. I think we're going to get buyers here. So the bodies are small, lots of tails, limit order bulls making money. It's a trading range. I don't want to be selling closes near the bottom. And then I thought it became buy the close on 37, 38, 39, big bar again, just like 10. And it's usually better not to buy the close of a big bar near resistance. It's usually better not to sell the close of a big bar near support. And that was it for buy or sell the close. Limit orders, none through here. I would not buy below 6. I definitely would not buy below 4. And then here, buying below 11, probably okay. But I think you stop buying after the double top with 16. And then in here, the range is really tight, difficult to make money with limit orders. The bulls were still buying below things and still making money, buying below, buying more, point lower. Even during here, they were able to make money buying the low, buying more, a point lower. But I think not easy to trade. And bears were selling at the high of every bear bar. 1 at bar 14, at bar 21, bar 24, bar 28, bar 31. They made money on all of those. And as I said, I would not do 33 because limit order bulls were making money, and we may get a double bottom with 11, again at the 60-minute moving average. And then up here, bulls were so eager to buy below bars, we could not get, it did not fall below bars. A lot of traders saw the market is always in long 37, and if they did not buy the 37 close, they placed limit orders to buy at the low of the prior bar, and they did not get filled. That told us that we were probably going higher. Even though we raced up to the ledge, bulls were probably going higher, but stopped below 35. And then here, it's somewhat tricky. Sometimes I do limit order sells and buys on closes. I sold one of the closes here. I don't know if it was 51 or 53 for a 1-point scalp. And sometimes with things like this, when I think we're not going lower, and then we get bad follow through for the bears, I buy the close. looking for a 1-point scalp. So what happens tomorrow? Daily chart, we have a doji bar. We have targets above. Clearly the daily, weekly, and monthly charts are all bullish, but the weekly and monthly charts are incredibly overbought, and the odds are we'll get a pullback on both. The monthly chart is the more important one. This month so far is small. Here's the monthly chart. So the low of the month is around whatever, 25, 25. The high is, the month's range is only about 50 points. And if we fall below, if the month stays this small and next month goes below this month's low, my minimum goal will have been met. A pullback in the market trading below the low of the prior month, and it would only be a 50-point pullback. A lot of these bars are 70, 80, 90 points tall. So if we fall below a big bar like that, then we have a 70, 80, 90, or 100-point pullback. This rally is so strong that chances are if we do get a reversal, it'll only last a month or two, and then we'll go higher. I don't know how much higher, but this is a really strong bull trend. So we may do the minimum to relieve the buy climax and just trade a bar or two below the low of the prior bar. And weekly chart, we may do the minimum here as well and just touch the moving average. So if we pull back for a week or two or three, which could lead to a pullback on the monthly chart, we could get a 50-point pullback, 60 or 70-point pullback on the weekly chart, and finally get below the moving average. We did not get to it here. We missed it by half a point. And because the weekly chart, monthly chart are so extremely bullish, the first reversal down will probably be minor and brief, not last very long before bulls buy it. What happens after the bulls buy the reversal? Will we race up? I don't know. The bulls would obviously like this to continue up forever, but it's so extremely overbought that I suspect that we'll end up doing this for 6 months or so. Right now there's no sign of it, but we'll probably start to get, doji bars and bear bars and sideways bars starting soon, but no top yet. It'll probably begin within a month or two. This is 12 bars without a pullback. Really unusual on the monthly chart. Okay, question. If you were looking at the daily E-mini chart as a 5-minute chart, where would you be buying? Daily chart. Okay, so let's put up the daily chart. So if I did not know the time frame and I just looked at the chart, not looking at the price and time axes, we have a tight trading range. We have a micro double top. I probably would wait for 2 legs down, and they may be small like this, 1 pullback 2. So I would probably wait for a couple legs down and for the market to get closer to the average price. And, I don't know how far we'll pull back, but I think if we do pull back for a week or so, bulls will buy it for at least a small second leg up. And this might be the end of the second leg up, less likely we'll do this. You can see, I think we're going to start doing this, which we do after every big breakout. You start to go sideways. And we're probably in the early stages of that. And when the market's in the early stages, it usually goes a little bit higher. Okay, early stages, it did go a little bit higher here as well. So I don't think that today's high will be the final high. But I do think we're probably starting to enter a tight trading range, whether or not we go a little higher. We have a measured move target on the daily chart, and we have another one on the weekly chart as well up here. Let me extend this over. So that's the weekly measured move projection based upon that. Okay, that's it for questions. No sign of a top, but very, very overbought weekly and monthly chart, and daily chart probably beginning a tight trading range. And so the downside risk over the next few days is small, but we'll probably be getting more selling. You can see that yesterday we sold off and did not reverse up until the end of the day. Today we sold off on the open. Okay, so the sell-offs, the early sell-offs are getting bigger. Instead of the markets opening near the low and trending up all day, right, and the sell-offs being bought immediately, we're getting bigger sell-offs on the open, so the bears are becoming stronger, and that means the market's becoming more balanced, bulls and bears, and it increases the chances that the daily chart will start to enter a tight range. Okay, hope everybody has a good night.